Thank you so much for choosing to support the channel. It means a tremendous amount to me. This is so much work. This particular video, I'm on take 3, and the first 2 takes were an hour long each. Every problem from dead batteries to corrupted files, anything and everything that could go wrong is going wrong. But I persist, I will bring this content, and let's just get going to the charts. I think I'm going to spend about 10 minutes on AMC, and then I'm going to try to hit just glaze over the top 10 mega caps, and that's going to be like a 2-minute summary on each one of those. So buckle up, this is going to be fast and quick. Okay, what I have up right now, this is my Elliott waveform analysis of AMC. This is the good stuff. You know that I've been using this book lately to study Elliott waveform principles, and Frost and Pretcher are not Mr. Elliott, so I look at this book and I say, I don't know, you're not the original source. You're 1 degree detached, and I don't like that, but that doesn't mean that the Elliott waveform analysis is invalid. I think that it's a fantastic way to analyze the price action. It's not super predictive, but it can be because it identifies critical levels of support and resistance, which, if broken, invalidate bullish or bearish counts. So I'm going to go over some of these principles really quickly. This is yerba mate. I'm going to be a little bit more self on these subscription videos. So if you don't know, I spent some time in Argentina, and a nice lady named Monica, she bought me this mate. It's from San Martin de los Andes, I believe. And it's I love yerba mate. Okay, so I just need that to help me power through here. So take a screenshot. Maybe not yet. In fact, let me just get rid of this line. That was from an earlier take. Okay, so the fast and dirty is that since the all-time high at 72.62, AMC has been in a 5-wave motive waveform downward. And what that means is that there have been 3 big pushes down and 2 big corrective phases. The goal of a motive wave is to make progress. Now, a motive wave is composed of 5 smaller waves. Waves 1, 3, and 5 are progress. Waves 2 and 4 are reversal attempts, basically. Those consolidation patterns are essentially triangles. Okay, they're triangles. They can be forwards, they can be backwards, they can be right triangles, so you get these right angled broadening formations. They can be tilted up for rising wedges, tilted down for falling wedges. It doesn't matter. They're basically triangles oriented in some random way, and typically the form of that triangle can help us identify how far the price will move and what the likelihood is of an upward or downward breakout. And that's the statistical analysis that Bulkowski brings us. So that's the quick and dirty on Elliott waveform, and I'm going to apply it here. So I have super cycles, waves in blue, 1, 2, and I label these at the top of the waves. 3 was way down here and brought us to that 1290 level. 4 brought us back up to $34. 5 ending us down at $970, and that's what I called the bottom on May 6th. And if you didn't watch that video, go watch that video. It's a great video. I absolutely crushed it. Here, let us have a look at how these waves subdivide. Now, cycle wave 1, 2, 3, 4, and 5 composes motive wave 1, supercycle wave 1, and then we find ourselves in a rising wedge for supercycle consolidation wave 2, and then we break down, and instantly this big push all the way from like 52 down to that $13 level, that's a wave 3. It's huge. It's the most commonly extended wave, and it does extend. And so I began the analysis right away into primary wave 1, primary wave 2, and then guess what? Primary wave 3 also extended. So you have a super cycle wave 3, and then it extends into primary waves, and then those primary waves, its third wave also extends into intermediate waves. So you get another extension, 1, 2, 3, 4, 5, and finally you find the bottom of cycle wave 3. You pull up into cycle wave 4 before falling down to cycle wave 5, and that cycle wave was pretty small. Then we found this big push up. Super cycle wave 4 took us much higher, which actually brought us back to the bottom of level of the first motive wave down at 29.40, and the price cannot close above that range and maintain a valid Elliott count. So let's just zoom in here. What happened here? Oh my goodness, this was a big green bar. After the moon we went, but look where the close was. Look where the close was at 29.33, 7 cents below that wave 1. That's crazy. So the next day we did have this big push higher, and the price closed at 29.44 or 4 cents above it. That's fine. That's a rounding error. That is nuts. And well, you know, maybe it was because that this corrective wave had a close above that level 1 bottom that boom, the price just got absolutely obliterated. And I have to zoom into a 15-minute chart here to really describe this. There were a couple of times during this downtrend where there was a couple of instances where I thought maybe there could be reversal, but I said no. Of course, the hype crowd is always calling for reversal at every single corrective phase, which is ridiculous. So I had cycle wave 1 and 2 coming really quick, really fast, really hard, and then the third one just started to extend immediately into these primary waves. And this primary wave also had an extension. Look how long that wave 3 is. It's huge. Pulling up into wave 4. This was not a bottom. I said this is not a bottom. I said this is not a bottom. And the price just kept falling down. And you can see that there are some corrective forms here that are shown in these different colors, and they do match the labeling for the cycle waves that they are. So it's good stuff. This is really good stuff. And so we didn't find a bottom until wave 5 touched down at 970. We had a big volume spike, and those volume spikes are actually what are signaling the beginning of those corrective waves. If you've seen these spikes, you know, maybe, oh, we saw a big spike, this is it, this is MOAS, but like, no, it's not. It's the beginning of a corrective phase. It's the opposite of MOAS. It's an attempted reversal, which when you're going down, to be fair, is up, but it's not like a guaranteed thing, not nearly. So, you know, here's, do we did a big volume spike right there? There's your volume spike. So this cycle wave 2 corrective phase started right here on this big candle, and that's how we knew we were in a corrective phase. Big volume spike, but just a single one, right? How about was there another one? You know, there's a big spike too. This is also corrective phase through here. This bounce up, and then here's another spike right here in volume, and again corrective cycle, right? And then boom, again corrective cycle, and then boom, again corrective cycle. So basically, what this does, this analysis details the fall from 55 down to 970 as a 5-wave motive wave form that has ended. And we now find ourselves in a consolidation pattern, a flat 335. And if we can get a break out and above this, to the moon. Actually, not really to the moon, but it is going to start a big corrective phase up to 61.8 to the 61.8% retracement level at 33.74 if we can get some breakouts above some downtrends, right? So this is looking pretty bullish to me. As long as the price is above that 1290 level, I'm expecting it to go higher. Right now, we do seem to have a little flag in here, a little bull flag, which could be the beginning of a motive wave 1. So this corrective push higher, you know, could be A, B, and C, and that C could extend higher than the amplitude of leg 1, and that would make me think it's a wave 3, and it could extend, and then we just start this massive rally. Like, honestly, that could happen next week, and I think that the markets are in a good position to bottom and move higher, and then these meme stocks would also probably push higher as well. Yeah, the everything rally I've been talking about. The everything rally may be about to begin, and this could be how it starts. So let's see here. That's 7 minutes. That's good. I wanted to spend 10 minutes on AMC and then get into the mega caps because there is just so much to talk about. So the important principles to remember here is that a motive wave has 5 waveforms. That consolidation phases happen in triangles. Those triangles have any shape and they can be pointed in any direction. And waves 1, 3, and 5 mark progress. Waves 2 and 4 mark attempted reversals or consolidation correction phases. And those are going to come in very, very important as I go through the mega caps as well. So let's go ahead and do this. Let me just pull up mega caps and let's start at the top. Let's start with Apple. Okay, so on the daily time frame, I got 2 minutes here. So what I want to share is that Apple was in a channel. This is a motive waveform, right? There's only 2 kinds of patterns, running patterns and consolidation patterns. So you got channels, measured moves up, flag pulls, those kinds of patterns. Those are all motive wave moving higher patterns. And then you have the consolidation patterns, which are basically just those triangles or those other shapes, right? Like diamonds. It's like, what's a diamond? A diamond's 2 triangles. Okay, so let's see here. Apple came and formed a double top at all-time highs, confirmed a double top when the price fell below the intermediate low down near 167, and then fell and started its new correction phase, or a broadening top, which featured a descending broadening wedge at the end of it. It broke down and out, and now he's going to be forming a broadening bottom. And this may look like a partial rise, but we don't even have enough touch points to really call this a broadening bottom. Not yet. We're still looking for touch 5, and I think we're going to get it. It's possible that this push up, this is a measured move up. Think about this move down. This is a pretty strong push down. So I'm looking for a corrective wave up. So 1, 2, 3, and then 2 and 3 again could give us a motive waveform actually up and higher. And if we can get a confirmed breakout, this actually could be heading higher, and this could be the low. Apple looks like it is ready to bottom. Apple's in a good position to bottom, especially closing above this important level of support and resistance. I'm going to go ahead and turn on the name, see what it is. I turned it off. Oh, it's just that support and resistance. Okay. So Apple looking like it's had a pretty tough year, but overall it doesn't look like it wants to push out very far below this this broadening top. In fact, I didn't calculate the price target, but it wouldn't surprise me if it's right here and the price is now just starting to spin on that level and is wanting to move higher. Volume has been decreasing, so this downtrend's probably ending. Implied volatility has been rising. It's probably time for it to come down to the price to retrace back up. Woo! Okay, going on to Microsoft. This is a great chart. I love this chart. I'm gonna start this one out in the monthly time frame because you just have to appreciate how much this stock has appreciated over the years. From 2008, it's just been on an absolute tear. An absolute tear. It's just departed from that trend line, and it doesn't care. It doesn't care about that trend line. So hopefully it doesn't come back down to it. Hopefully it never does. That would be a huge drop, but it could. It could drop a long way and still be in a bullish position, which is insane. It's just such a powerful company, I guess. So the uptrend from the 2020 COVID low was broken, obviously, after a triple top was formed. And I think what we saw was this nice, clean, measured move down. So this is a corrective A, B, and C pattern from that big push higher. And it looks like it's over, if you ask me. It did fall within a channel, which is really nice. I mean, this is a clean chart. It's just so clean. So I took the amplitude of this first drop down and I applied it to the top of this corrective wave. And when you do that, it comes down to basically exactly where the price bottomed in the last couple of weeks. And now what I think I see is a bottoming pattern. I think I see a diamond in here. I think I see a diamond. I think that's a diamond, and we don't have a breakout yet, so I can't say which way it may or may not go, but there's a gap to fill up here, and filling this gap would involve breaking this downtrend, and essentially this would be a great spot for Microsoft to reverse as well, completing a corrective wave down, forming a consolidation pattern, and I think that it's also in a similar decreasing volume trend. Maybe the selling pressure is coming to an end. The RSI is towards 50. It needs to break out above that. And the implied volatility has been a consolidation pattern as well. But overall, I think that Microsoft, just like Apple, is in a great position to reverse and start going higher. And these are the mega caps. So if the mega caps start moving higher, that's going to have an impact on the indices. Let's move on to Google. Alphabet. I don't know about Alphabet though. Alphabet found a top and then it just started forming this descending, broadening wedge right away. And I'm just looking at it and it's like, this looks like a bear flag. It'd be a beautiful measured move down. And if we did get a run of the same height as the incoming wave, then the target would be that uptrend. You know, and it just this doesn't look like a bottoming pattern to me. This really does look like a corrective wave. We're going down lower. That's what I think. You know, this could be 1, 2, 3, 4, looking for wave 5. You know what I'm saying? So it just looks like Google's going down. Like, what? Yeah, I don't know. But it hasn't formed a breakout yet. So it could be that, you know, we're just touching on the bottom of this channel here. And the price could close higher and move higher. And then I'd have to figure out what kind of a bottom that is. You know, it just depends on the time frame mostly. I guess I'd have to look at a larger chart. But to me, this does look like it's going to go down further, which isn't great. Amazon, I think, is in a similar position where it doesn't look as bullish as some of the other mega caps. We had a rectangle top. And it crashed and burned, confirming that breakout when it fell below 143, moving down to 125, finding a low near 102 and bouncing, and it's now spinning on this uptrend. You can see what happened. We had a double bottom and the price just soared back above it, hit this level of resistance, which was that triangle top target, and then it fell. And now we're having a hard time breaking out above that uptrend. So if this sets a new lower low, we're talking about another measured move down. This looks like it's an ascending triangle. Right, just a triangle, whatever, right? And then if we got full measured move down off of that corrective bounce, then look, it's also targeting that uptrend. Really interesting, right? Really interesting to see Alphabet and Amazon in the same place and Apple and Microsoft in the same place. Apple and Microsoft looking like they're ready to reverse move higher. Alphabet and Amazon looking like they're only halfway done. And that's something that's important to remember too, because I think that if overall at the S&P 500 doesn't reverse now, we're only halfway done there as well. So I'm going to get into that too. So I'm at 13 minutes. I'm just keep plowing through. Here we go. Tesla's next. Everyone loves Tesla. I've been doing some analysis on Tesla here and there, but I haven't really looked at the chart in a long time. So I did identify a right angled and broadening descending formation in purple here, and that was a long time ago. It was during the formation of this head and shoulders top, and this head and shoulders top hadn't broken down yet. So all that analysis was from January. So 6 months ago, I had that analysis. I put down a 704 target on Tesla, and sure enough, the price did break down. It reached the head and shoulder target 803, bounced and found its way down to that right angle and broadening descending formation target, and then bounced. And this, I believe, is forming the first of first wave down in a corrective wave form. We had a bounce for B coming back up to that shoulder height, and now it's on its way back down, and it looks like it's completed a full measured move. So I took the height of this first leg, applied it to the top of the corrective wave, and then boom, what is that? Perfectly down here. Now we find ourselves in a consolidation pattern, a triangle, a symmetrical triangle, and we'll see which way the price goes from here. There's a lot of support and resistance at 502, and if we did get a move down, that'd be kind of devastating, right? Eesh. So it's hard to say which way this is going to go, but it's not looking very bullish. What I super found interesting too is if you take this and let's turn on some extensions. If I just turn on the left and right extensions, look at this. That low is very near this trend line, very near. In fact, I could probably almost make that fit, so to speak, right? So yeah, there is something here, right? It's possible that that this pattern is just growing, that this could be an even bigger pattern, and maybe we'll eventually have to zoom out into the monthly chart to see how big it is. The bigger it gets, the bigger the move after it comes. You know, it could be like this is the biggest head and shoulder top in history, right? I don't know. We'll have to see. Berkshire Hathaway. This is a chart that I'm really excited to get to know. I love listening to Munger and to Buffett talk because those guys have a different vision. Listen to me. They have a different vision of the world and how things work, and they do not like the ETFs like SPY, right? Because of the voting rights for some reason. And he was saying that at the Daily Journal's annual conference. I think it was earlier this year. That really grabbed my attention. I'm like, why is that? Well, guess who owns those? Or you know, the SPY. Like, just look at this SPY. Let's go SPY. Who is this? Who is this? Spider? Huh? SPDR? Is this like, you know? There's something to be aware of here. I'm gonna be digging into that. Okay. Anyway, but Berkshire Hathaway, you know, the same story. Just huge tear up. It's crazy. It just goes up and 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 up. And we're going to zoom into the daily chart here and have a peek at what's going on here. It looks like Berkshire Hathaway did form a ascending broadening wedge and has broken down from there and has now formed a clean measured move down, right? So this might be wave 1, 2, 3, 4, and 5, finishing that 5-wave motive waveform heading down. And this could be the beginning of a new motive wave. Look at how oversold it is. This is crazy. It's like, how far back do you have to go before you actually see Berkshire Hathaway reach oversold? You know, 2020, and then again at 2008. So it's a big deal when you see Berkshire Hathaway this oversold. The volume trend is decreasing. Implied volatility is like not applicable. So I'm guessing this is a non-optionable thing. That makes sense. But yeah, whew. So Berkshire Hathaway looking fierce, ready to move higher. I'd love to see this turn into an ugly double bottom, and then boom, a huge shoot up, probably a retracement, and get a nice huge head and shoulder bottom. In fact, there'd probably be some more analysis to be done there. I think though that Berkshire Hathaway is looking like it's ready to reverse too, most likely. United Health Group. I don't know anything about United Health Group, not at all. You know, I don't know like much of the fundamental analysis behind these companies. This is all technical analysis, but I do have some fundamental analysis on American Eagle Outfitters, which we'll be getting into later into future videos. What's my time right now? 17 minutes. Oh my God, I gotta go. All right, here we go. So this is a strong channel. You can see that the price did overthrow. Typically, you see the price overthrowing a channel like that. That's the top of a motive wave, either a 3 or a 5. So this is probably a 5-way top through here. And you get a head and shoulder top. This thing is nasty. The price fell down and it challenged the uptrend, came back and set a new low. This confirms a downtrend. And now you see the price rising back up to this uptrend that we established from the 2020 low. And it looks like it's failing to break out above it. So if it does fail to make that recovery, then I am looking for a measured move down, which is targeting this support and resistance at 425. Which is probably set by a prior peak. Yes, the peak that we made in 2021. So United Health here looks like it could go lower. And you know, just looking at the chart right now, it looks like there might be a bigger pattern here. Look at how big this would be, this pattern, if I were to follow my yellow lines, right? That's possible, right? It's possible it's in an ascending broadening wedge. In fact, that looks really good, doesn't it? Let me take off those lines there, and you still get that throw over from that wave 5, right? And you see that this is broken out. This is a pullback, and rejection at this trend line will form a partial rise, and that would indicate the price is going lower. There'll be a chance to bottom again at this lower trend line to form an inverted head and shoulders, but that has yet to be seen. What we're really watching for is whether or not the price can make a meaningful close above this uptrend or turn around. Once it sets that new low, then we're going down. We're looking for a target at 425. So again, not looking the best because it's already rejected that uptrend once, but it is in a good spot if it were to run to push through that uptrend. Johnson & Johnson. Okay, Johnson & Johnson is one of those charts that goes up and up and up and up and up and up and up. Maybe it had something to do with COVID not really hurting them because all of a sudden their products became more in demand. They had just, no problem recovering from 2020. Gouged! Look at that. Wow, incredible. And then we had, some rising wedges. This is kind of confusing to see consolidation patterns back to back like this. So the analysis here is really difficult. But what I do think I see here is a megaphone top. And there has been a partial decline touching down on this uptrend nearly and now starting to push higher. So I'm thinking that Johnson & Johnson is actually looking bullish. And you do see this yellow line, this uptrend. And you might be thinking, hey, is that a rising wedge? And it's hard to say. Let me get the weekly chart out. There we go. Weekly chart, maximum time frame. I don't really think it's in a rising wedge. That'd be touch point 1, 2. It doesn't come down enough. If you wanted to draw the wedge, you'd have to be connecting these lows. But even then, it's like it's so long and it's so skinny. It's probably not a wedge, right? It's probably more like a motive waveform heading higher. So yeah, this looks bullish. Johnson & Johnson looks bullish to me. Going over to Facebook, Meta, barf. Social media, I think, is pretty much a scourge of society at this point. It is forming a let's see here, descending broadening wedge and has fallen down below a trend line from that 2020 low. And I think now it might be in a broadening bottom, actually. It looks like Facebook might be attempting a bottom. Let's have a look here. It's at 160 now. It's having a hard time overcoming this trend line here from the overall pattern, but we do have enough touches for this bottom. If this does break down, this ascending broadening wedge that's shown in yellow, the target is a little lower at 123, and that probably agrees with the target from this broadening bottom. I'll have to check up on that. If this does form a bottom here and we do push higher, it could form an uptrend, touch here, partial decline, and move higher. So again, even Facebook is starting to look like it might be at the end of its downturn as well. Moving into Visa, I think Visa has a correlation between consumer debt and COVID created an abundant amount of cash because the $2.7 trillion was legislated into existence. The Fed had nothing to do with that. And consumers had a bunch of savings because they couldn't spend their money and they got stimulus, right? So the economy became cash flush and prices soared. It had nothing to do with inflation. It probably had nothing to do with inflation, which is the increase of the money supply, right? Rising prices in a free capital market, like a bunch of cash gets thrown into a capital market, and guess what? The capital market removes the cash from the marketplace. That's its job. Oh no! It's like, come on. The Fed can't do anything. When you pump cash into an economic system with no interest attached, then the loan holder doesn't have to take any cash out of the system outside of the bank and itself, right? So that's the whole point behind interest. Like, debt is good for the economy. Yeah, it's when liquidity can no longer service debt that we run into issues. And so you have this decrease in consumer debt, and it's starting to rise now. I've seen a lot of people stipulating that that's bearish, like, oh man, consumers are out of savings, and so they're starting to use credit cards because they have to, and that's bad for the economy. And it's not. It's probably good for the economy because it stimulates the economy, because it creates money, it creates liquidity when people start using their credit cards. So you have Visa here finding a 2020 low and pushing up higher, and then it starts coming down, right? And now we're in this triangle, but I fully expect this to make a bullish breakout and head to all new highs as credit card debt goes up, because for them that's money in interest, right? And think about this too: as those people have to pay interest, they have to find money in the free market to pay back the loan, which is deflationary. Right? So I'm thinking that, consumer debt's good because it instantly stimulates the economy. There's liquidity, but then it also takes it out over the long term, right? And the Federal Reserve doesn't have anything to do with that. So, it's a complete misnomer that, sure, the Federal Reserve can totally tank the economy, right? But the markets can naturally do that as well. And I think consumers running out of savings and going to debt actually signals that. And that could be that could be a bullish thing for our consumer debt-based economy. This is not a cash-based agricultural economy. It's not. That's not how it works. So when COVID came and consumers paid off their debts and delinquencies were all-time lows, guess what? All of a sudden, our economic growth stops too. What? It's like opposite of what you would think, right? It's opposite of what you would think. But the 2008 financial crisis was similar. It was because those loans, those mortgages could not be paid. That was the problem. They could not be paid. Okay, so like, all right, here we go. Whether a loan is defaulted and closed or whether or not it's paid off, the effect is the same in the economy. All right, and so this is just a different kind of recession. It's the good kind. I think it's the good kind. I think soft landing is totally on the table. I really do. I think that the markets are ready to turn around. I mean, am I optimistic? Yeah, and if it's not like that, we're going way lower. So okay. What am I at? 24 minutes. I gotta blast through a bunch of other stuff. So those are the 10 big mega caps and AMC in-depth analysis. There is more stuff that I want to cover though. Let's go really quickly into the indices and futures. Right now, I only have SPX up, and I did some speculative charting here on an earlier take. We're in this flat 335 broadening top, I believe. And I've corrected this waveform analysis the last time I presented on my channel. I'm trying to get this better and refine it as much as I can. I think that there's a gray zone through here. As long as the price is within here, it's really neutral. It's really, really neutral. If we can get this bounce that we've recently seen to push higher and extend above that 4,000 level, that is a good start. I think, though, really we need to get above the top of this corrective wave 4 and close up here before we can say, hey, we have a new potential motive wave pushing higher. I would love to see the price come up and touch the top and then break out and up and never return, never look back. But it's possible that it'll come back down and actually reach this broadening bottom target before it does. This is what I'm going to be calling the everything rally as we approach new highs. I think gold's going to rally through here. I think everything's going to rally through here. If this rally turns out correctly, just like this, then AMC and GameStop are also going to go nuts. And then boom, then we'll have this big crash. Then we're going to feel the pain. Then we're going to find peak bearishness. Yeah, let's talk about peak bearishness marking the bottom of the market. Come on. Where was that? Peak bearishness that was going on back here at 3,800, and now we've seen a low of 36. Like, come on. You cannot follow the mainstream news narrative and understand what the market's doing, right? Inherently, the herd gets taken advantage of in the marketplace, and so if you're listening to the herd, you're probably going to get herded. That's what the market does. It does as much damage as it can, as people say, and I've seen that. And being just naturally a contrarian, I do just fine because I don't have this problem saying you're wrong. That makes me abrasive and unlikable to some people, but I don't care. Just be yourself. That's just what I've got. So implied volatility is rising here. The RSI is below 50. You know, it's not great. It's not looking great. We're going to need more upside. This gray zone's like a wishy-washy. Who knows what's going on? But I think that the market's in a good spot to bottom and pull up from here. Now, there's this falling wedge in gold futures, which is really exciting. I have this label as a 5-wave motive wave form with the truncated fifth exactly falling exactly where I thought it would. And this is meeting my expectations to a T. We're forming a bottoming pattern. It's going to be a double bottom below an uptrend. And I think what we're going to see is the markets turn around and then gold futures to also come up. And boom, we're probably going to see gold rise to $2,030. That's what I think. And I think on an even bigger time frame, it's going much higher than that because we're coming out of a rounding bottom right now, all right? There's the rounding bottom and there's the handle. This is a true cup and handle. This is a true cup and handle. Don't show me cup and handles on 5-minute charts, 15-minute charts, hour charts. Even a daily chart, it's like, okay, it's gotta be a big daily chart. This is what a cup and handle looks like. I'm gonna go ahead and pull up a bigger chart here. Not weekly max, I was doing some stuff there. Weekly, here you go. This is a big descending triangle, right? And it you know, there's you can interpret this in either way. That's fine. I have my touch points shown in yellow here, and we've already had that breakout and reached that target. Now the price has come back down, which is why I think the descending triangle isn't the best analysis form. I think it is the rounding bottom. So I'll be working on that analysis too, and following up with that next week. The target, though, overall is much higher than that. I'm thinking that, you know, it's possible that this is a ready 1, 2, 3, 4, and we're about to start wave 5. And that could bring the price of gold all the way to $3,000. I think. I really think that. Theoretical performance target 2,497 if we can get a full push. So that excites me. I'm very excited about gold futures for that reason. So moving into Bitcoin futures here. Let me just pull up a different chart. Make sure I got Kappa Vision pulled up. Oh, it's default. Is it? No, it's daily. Okay, let's zoom in. Enhance. This is so much information to try to cover in 30 minutes. I got 2 minutes left. So Bitcoin's been falling through a descending broadening wedge, and it looks like it's about to form another measured move down. Yep, because it recently lost its uptrend, its corrective uptrend. And I was thinking 15 would be a good spot for this thing to stop out, and that'd be a partial decline. And that'd be half of this measured move. If you do get a measured move down, and that second leg down only meets half of the full length, that's pretty bullish. Generally signals a bottom, and so I'm expecting Bitcoin to move down a little further. I mean, look at the RSI. Remember, the RSI only tells us what the averages are at, and the averages are saying that it's losing a lot of money. It's losing a lot of value in dollars, just in dollars. Its value and legitimacy as a currency is immutable, I think. Who cares what the dollar value is? The price is psychological. You've heard that before, but I think here it's true. So we do have a decreasing volume trend. Implied volatility is doing, I don't know, not much. So yeah, maybe Bitcoin is bottoming. Ooh, that'd be nice. I think if Bitcoin were to bottom here, that'd be a great chance to say, maybe this is the wrong ID, and maybe the correct ID is that it's in another descending broadening pattern. Though that makes a channel, doesn't it? That makes a channel. Looks like a bear flag. So I guess we'll see what Bitcoin does. I could check. This is just futures, so it doesn't reflect the price actions going on all weekend. I haven't looked at it in another way. So, okay. And the last chart that I want to show, I know there's still more. There's one more, and it is American Eagle Outfitters, because I actually took a long position here at 1150, and I knew the price was going to go down lower. And so I actually went ahead and did some Elliott wave analysis for him here, and I think that we've seen the bottom of that downtrend. So I entered at 1150 because I figured that this was actually a pretty good zone to bounce from, and I'll explain that later. And it does look like we've completed our waves down, our motive waveform down, so looking for a corrective bounce now. Turning on Capivision and going into the 3-day yearly chart. What? Yeah, this is a crazy stock. So I have the super cycle 1, 2, 3, 4, and then 5 was this, like, 5 extended like 3 times, right? So you started the cycle waves, and the cycle wave 3 extended, and then into primary waves, and the third primary wave extended into intermediate waves, and that's where the extensions ended. So it was like a compounded extension here. And the price rose and rose, and then it fell, and you can see cycle wave 1, 2, 3, 4, and then coming all the way down to that uptrend at 5. And I think this is the bottom here, and I think we're in a probably like a bottom right angled and descending broadening formation. Probably you see that between that horizontal level and this, and we do have the beginning of a formation of a pipe bottom here on the daily chart. So I did enter into 100 shares here at 1250, and I started hedging by selling calls and buying long puts, and I managed to hedge 14% of the paper losses I'm holding, right? So that's an increase of 1% of the overall position, because I used $1,500, even though the shares only cost $1,200 or $1,250. I used $1,500 because I need some cash, because if you're gonna get a vertical spread going, sometimes you need a little cash in order to cover that. You just use the covered call as a way to bring the cost down and to hedge losses, right? And so the overall position is $1,500, and it's 100 shares, so it was 1,250, and then 250 of cash, and then I was able to bring a measly 1% back, hedging downwards, but that's fine because I anticipate holding the shares for a long time. The thing about American Eagle is that they pay dividends, and I know that they're more based in the Americas, so I think that the reversing trend in globalization isn't going to hurt them as bad. And I think that in the everything rally, we're going to see American Eagle soar and skyrocket because the position is far less crowded and it has even higher short interest than AMC. And I don't use short interest in my analysis, and I don't need to. This chart tells me that a push up to 14 is just like likely, especially if we get that everything rally. And if shorts do close, well, there's more short interest here than in AMC. So okay, that's Capivision for this week. It's just the first episode. I just wanted to cover a bunch of ground, kind of set the tone, show what I've got cooking. This is just the beginning. There is so much more coming. Thank you for subscribing and supporting the channel. Let me know what you think. I'm going to be doing live streams too. Not sure what that's going to look like, but until then, happy trading.